Like in every young industry, the volatility plays a major role and has a large effect on the market as a whole. As we know, the crypto industry is actually the youngest asset class in terms of financial investments vehicles. It's the youngest asset class, the most illiquid asset class. Thus, it's so volatile. And for the crypto enthusiasts that find themselves already in the industry, or those that are still sidelined and waiting to see what happens, it might seem so scary. And you ask yourself, why is the market so volatile? Why is the market dropping? The interest rates were just cut a few days ago. Isn't the bull cycle supposed to be starting right now? What's happening? We have a pro-crypto administration. We have a Genius Act just passed. We have a Clarity Act just passed the House. It's going into the Senate now. Interest rates, like we say, just got cut. What's happening, right? Why is the market still so down? So the easiest answer is emotions, right? Emotions. And to really get to the point, let's look at what just happened. Large liquidations happened like not seen before in a while. So cryptocurrencies sunk as 1.5 billion US dollars were liquidated, right? So those obviously, like we just said, interest rates are cut, favorable, crypto administration. Things looked great, right? And many people are bullish of the markets going up, and they were caught unaware and they were wiped out completely. Uh, let's read this article even. Let's take our time and look at this even more. So cryptocurrency traders saw more than $1.5 billion in bullish wages liquidated today, right? Of course, this triggered a sharp sell-off that sent Ethereum and other tokens down, right? Ethereum went as low as 9% down, and it touched the 4,000 level actually. Nearly $500 million of leveraged long positions. Long are positions that are betting that the prices are going up. They were liquidated, $500 million. And that's what caused that in a very illiquid market, of course, will cause the market to significantly drop. Of course, same happened to Bitcoin, even though it declined only 3 times as much at 3%. And then, of course, the second largest one, Solana and Algorand and Avalanche as well. What I want us to take away from here is the following. This right here, right? So at the beginning of 2024, when ETFs, Bitcoin ETFs were put in place, of course, this caused a lot of hype um, of Bitcoin now hitting millions of dollars. And as we know, Bitcoin is the largest cryptocurrencies in our industry, with more than 2 trillion, like more than half of the entire market cap of the crypto industry is Bitcoin, or is represented by Bitcoin, I should say. So in 2024, when Bitcoin ETFs came, it caused for a big buzz, and it pushed Bitcoin price high in anticipation that it's going to be this next $1 million asset. And then end of 2024, in anticipation of the Trump inauguration, he also promised to make Bitcoin the Treasury strategic reserve, Bitcoin strategic reserve, and all of these things. And that pushed Bitcoin even over 100,000 and so on and so forth, until we saw that eventually the promises were not held. And the Besant even came out publicly and said they're not going to buy any of it. They're just going to hold on to it, right? So all of that was based on hype. So the price movements since 2024 have been based on hype, anticipation, market anticipation, and so on and so forth. And same thing is happening or happened this week as the interest rates cut were coming. anticipation was that the markets are finally going to rally, we're going to see all-time highs, etc., etc. And the opposite happened, right? Washington, they couldn't agree, the Republicans, the Democrats. Now they're facing, as of October 1st, they're facing possibly government shutdown, and all of these things are causing uncertainty. The market doesn't like uncertainty. And this is what's causing the market to be so volatile right now. So anyway, back to this article. What I want us to also understand on that same note is that demand for publicly listed companies, so-called DATs. We made a video about this. What is a digital asset treasury? They also were set up to accumulate tokens, right, and help drive Bitcoin and Ethereum to all-time highs, right, in August. That momentum has started to fade as shares of these so-called DATs, or digital asset treasury firms, ranging from MicroStrategy to Japan's MetaPlanet, retreated, right? So it's fading because in order for this flywheel to work, the price of Bitcoin needs to keep going up, or similar, the price of Ethereum needs to keep going up. So the moment the price stagnates or even drops, this unsustainable flywheel effect is not going to be able to work. So this basically what the article is saying. So it feels like the market needs a breather, with some participants concerned that the DATs, right, the DAT trade is losing steam and there are no more meaningful inflows on the horizon. These are the fears that the markets are experiencing. And on this note, I'd like us to tune in and listen to this interesting video of this gentleman. And let's just tune in briefly. It's just less than 2 minutes of what he's about to say here. I hope you can hear the audio. Let me play it.
Has anyone tried to, final question, has anyone tried to convince you to mine Bitcoin?
Yeah, lots of people.
Yeah, and what did you say?
No.
Have you changed? Are you changing your mind now to the 100,000?
No, because I don't. It's, to me, it's not. This is the part that I always get. The people misunderstand what I'm saying. Okay, yeah. You want to buy Bitcoin because you think it's going higher and it has performed really well.
Right.
Go for it, but don't tell me that Bitcoin is gold, because it doesn't behave like gold.
Sure.
And I don't care what Michael Saylor can come up with every reason under the sun why gold is going to zero, and I think some of the stuff that he says would make Jordan Belfort blush. Okay, and I mean he and a lot of the Bitcoin maxis have these outrageous ideas about where Bitcoin is going. I've never said that I had anything against Bitcoin. I just don't believe it's gold. It's not the same.
Yeah.
And why is every central bank in the world and every big sovereign player buying gold instead of Bitcoin? You know, and I'm not saying that Bitcoin is going to go away, but don't tell me it's gold. It's something. Right. But every time they come up with a reason, a utility to it, and it doesn't work. The last one was, the U.S. is going to create a Bitcoin reserve. BS. I called BS on that right away. It wasn't feasible. It wasn't logical. Now they're playing this corporate treasury game, which has run its course now, and all these stocks are collapsing now below their net asset value of what they bought the Bitcoin for. So that game is over, and at some point, that Bitcoin that was purchased is going to unwind. I suspect that Bitcoin is going to have a correction to now get rid of all of that was bought on speculation that it was going higher because of the corporate treasury strategy that Michael Saylor started. So now he's got to come up with a new thing. I don't know what that's going to be. It's not a currency. It's not useful as a currency, which was the original plan.
Yeah.
And he's touting a store of value. That remains to be tested in a crisis, okay? Because you can only test store of value, true store of value, when you have a crisis. So Bitcoin has not had that yet. Like a real crisis, when people panic and they want to sell everything.
Yeah.
Let's see what happens to Bitcoin then versus gold. And, I may be wrong, and they may both go up or they may both go down. But my guess is that gold will go up after a crisis more so than Bitcoin.
Let's just take the...
So I hope that you're able to hear the audio. And just to summarize the things that this gentleman said, it's more so about the DATs, the digital asset treasuries, also talking about how sustainable that is He was talking specifically about Bitcoin, that digital asset strategy. And this was the pioneer strategy that pioneered this strategy, Michael Saylor did. And it's based on taking on external debt from investors, taking on loans, debt to purchase these digital assets. And in our case, it's Bitcoin and Ethereum. And this only works amazing in terms of when the price goes up. But what helps Ethereum strategies is that because you can stake Ethereum, you're still generating revenue, even despite the markets fluctuating. You're still literally earning revenue. Plus, Ethereum is a platform where, as we see, the majority of DeFi is being built on, TradFi is building on. Specifically, we saw the majority of stablecoins that the super app or blockchain are predominantly on Ethereum. We see tokenization of assets are predominantly on Ethereum, specifically tokenized treasuries like BULLRUN, commodities, tokenized fiat currencies like stablecoins, like we just said. These are items that are getting ready to be built on top or launched on top of Ethereum. And this will bring utility, use case, and volume and liquidity on top of Ethereum. And because of staking is at the heart of all of this, will also bring the stability. So liquidity that will be needed to back all these tokenizations of assets, or these tokenized assets rather, will bring stability. And adding staking to it will bring stability even more to Ethereum. And this is not going to be, so Ethereum will not be as fluctuating as much, as volatile as much. And this is going to help very much so. And Ethereum, you can stake and earn revenue regardless when the markets are up or down. That's exactly the difference. And this is what the gentleman was actually just saying in a nutshell. Also, what I want us to understand on that note is that so far, the strategy has always been external financial funding to accumulate digital assets, predominantly Ethereum or Bitcoin. Now, there is a Alibaba founder's financial company, right? Jack Ma is the founder of Alibaba. And he has co-founded another company that is a financial firm. And this financial firm purchased 10,000 Ethereum. Why is this hitting the headlines? First of all, let's understand one thing. So anyway, this financial company is called Yunfeng Financial Group Limited, and it's listed in Hong Kong, right? And it's co-founded, like we said, by Alibaba's Jack Ma. Jack Ma is the founder of Alibaba. Why is this so significant? Let's look at Alibaba right now. Let's come to Alibaba right now. Alibaba is right now the 31st largest company based on market cap in the world. So this plays a major role because so far there's not been a company that is doing, whether it's Bitcoin or Ethereum, there's not been a company that is in the top 31 in terms of market cap. It's almost at 400 billion in market cap. This is the first company. It's not Alibaba itself. Let me clarify that. But it's the financial arm of the co-founder of Alibaba. But just to see that its parent company is the 31st largest company based on market cap in the world, it's a significant thing to see that such a large company is into Ethereum, purchasing Ethereum, and for their reserve as their reserve strategy, right? So I want us to go back to this. So announced that they purchased 44 million in Ethereum, close to 10,000, right? That was earlier this month. So what's interesting here is this. So they said that, first of all, the financial board approved it. So it's not like some small 10 million market cap company that was just spun off last weekend and now they just doing whatever they want to do with the company without involving the board or anything. This company was founded in 15 years ago, so 2014, actually 11 years ago. No, 2010. So, and by the founder of Alibaba. And now the beautiful thing about this is the board was involved and they approved it. It's not like the CEO, the founder is just doing whatever they feel like doing and not involving the board members, the shareholders. But everybody is on board on this one. That's the first thing, to acquire cryptocurrencies as strategic reserve asset. So it's amazing to see that such a large company is accumulating Ethereum as a strategic reserve. However, funded entirely through internal cash reserves rather than external financing. This is where the difference is. This is exactly where the difference is now. So this large company doesn't have to dilute their shares and have external financing. It's an established company with cash flow, and they're making real revenue, and they have deep cash flow. And it's a 15-year-old company that's been around, and its parent company is Alibaba, which is the 31st largest company in the world. And it's the largest e-commerce company in Asia, only behind Amazon in the world in terms of e-commerce. So this is a different approach from other public companies like SharpLink or Bitmine or MicroStrategy or all these other DATs, right? Digital asset treasuries. This is exactly the wave that we're about to experience, community. This is exactly how it's done the right way. If you're an existing company with existing cash flow, and you first of all bring the whole board, everybody's on board, and then you acquire these cryptocurrencies as a strategic reserve asset, Ethereum in this case, and it's funded entirely through internal cash reserves because this company is actually making money. It's not just based on hype, but they're actually making money. They have a cash flow, they have revenue, and they're avoiding external financing altogether, and they're accumulating Ethereum as their strategic reserve asset. This is the new wave that is coming. This is not the type of wave that other public companies are making right now. And once the price goes down, they start panicking because they can't accumulate more Ethereum. But with such companies such as Alibaba or their financial arm, Yunfeng, they don't have to worry about volatility of Ethereum. They don't have to worry about it because they're an existing company with deep pockets, deep revenue, real business, and they're using their internal cash reserves to purchase Ethereum and not external. This is a whole different approach, right? And this is exactly the point. The other point I want us to make is that this marks the highest profile Chinese financial service company adopting cryptocurrency treasury strategy, adopting Ethereum treasury strategy, I should say, right? And we all know how China has ongoing crypto restrictions, but nonetheless, even though they're not listed on mainland China, but it's in Hong Kong, and they are a high-profile Chinese financial service company, like we say, because they are tied directly with the founder of Alibaba. And this is exactly what I want us to understand. And this is why I showed us the assets listing here, how large Alibaba actually is. And at its prime, it was closer to $1 trillion, $1 trillion market cap, $1 trillion market cap. So why am I mentioning this? The reason why I'm mentioning this is because the founder, Jack Ma, was last seen publicly in 2020. He just came back the end of last year, beginning early 2025. And as you see, yes, Jack Ma has made a notable return to public and corporate life starting in late 2024 and early 2025, culminating in a more active role for Alibaba in 2025, particularly around a company, doing speeches and all of that. So this follows his retreat from the public eye late 2020 after a speech criticizing Chinese financial regulators. That's a whole video on its own. The point is that he was gone since 2020, away completely out of the public eye, and he was only seen in February. He only appeared in February in the front row, shaking hands with the Chinese President Xi Jinping when he was holding that speech on bringing together the tech magnates in China, wanting to push forward cryptocurrency and AI. That's when he was first seen in public again. And the first thing he does, one of the first things he does that is so interesting is he's using his cash flow rich financial arm company to literally purchase Ethereum and get into a strategic Ethereum reserve. And it's funded sustainably through internal cash reserves. This is the new wave. So imagine if Alibaba is doing this, or the financial arm of Alibaba co-founder Yun Feng is doing it. So there's potentially other companies that might do exactly that same approach because they have the cash flow. They don't have to dilute their shares. And what's happening here also, what I want us to understand, I think it's listed here, is that they're actually going to place, there we go, here it is. Yunfeng operates as a public traded arm of Yunfeng Capital, the private equity firm, right? Ma co-founded it, like I say, it's back in 2010. So it's a 15-year-old company, actually. And it's a very profitable company. It provides comprehensive financial technology services, including brokerages, asset management, insurance, fintech solutions across the Asian market, right? And what I want us to understand here also is that it's listing its asset. These assets are being listed as income. They are being listed as income in this company. And that's exactly, that's another thing that is really interesting for them. So another thing I want to show us is that during this market, we also see that, again, BitMine is one of those companies that are actually soliciting external finance to purchase more Ethereum. So they just bought another ETH this past week, 264,000 worth of ETH. They piled it even more. And if you look at other DATs, you see that BitMine is by far the largest. And it's this news that just came today that he purchased another more than 200 added to BitMine. So this number here is not accurate. It's more like 2.4 million right now. So they have like roughly 2.4 million ETH right now. So it's more than the list is showing right now. But these are just other ones like SharpLink. You just see how way ahead they are. So currently they have almost 3 times more than the second largest one. So you see how they're really piling up on Ethereum. Why they're doing that is because you don't have to sit and wait and see what's going to happen in the future. If you can see or rather anticipate what's coming in the future, you'll understand why these institutions are piling up so much on ETH. Later tonight, we're going to have the Twitter session. So hopefully you'll participate, you'll be part of it. That's where I'm really going to dive deeper into us understanding Ethereum, not as an asset, because we focus so much on assets and tokens. And we are limiting ourselves in thinking that that's what blockchain technology is all about. That's what the blockchain industry or crypto industry is all about, just trading random tokens. But we miss the point that this is actually our technology. And once you understand that and look at it like that, you'll have a whole different perspective, and you look at everything so much more different, and you'll see things from a bird's eye view, and you'll see the big picture and understand why these companies are accumulating so much Ethereum. Why is Jack Ma coming out of exile? And one of the priorities, one of the things that he does instantly is to use his financial arm company to start accumulating Ethereum as a strategic reserve asset. And also right here, using it as a strategic reserve asset, right? As a strategic reserve asset, and it's funded entirely through the cash flow. And this is different. So Jack Ma has always been the one to do things differently, focusing more on sustainability and focusing more on the shareholders, right, as well. So this is a more efficient way, a more sustainable way to accumulate a reserves treasury. So what if Amazon starts doing it? What if Apple, Google, Microsoft, and all these other cash flow rich companies that are listed, that are in the top 50, top 30, start accumulating with the excess cash reserves, right? And this is exactly where this is heading. So if you look at Ethereum as a technology and understand that this is where the next upgrade of the traditional financial system is being built on, and you look around and see all these infrastructures being built, and the large players that are spending hundreds of millions and billions of dollars to build these infrastructures and set things together. And you see geopolitics that are the way geopolitics is going with the BRICS on the one hand and the US on the other hand. And you realize that we need, based on the World Economic Forum, over one ledger that is neutral. And more to this later on tonight when we're having our Twitter space. So I hope you'll tune in and come and listen to that. So that's a whole different topic that I'll save for the Twitter space. The point I'm trying to make here, community, is that let's learn to look at this crypto industry as a technology. And it will open and broaden our horizon to understand why are these individuals piling up on so much ETH? Why is Jack Ma coming out of exile? And one of the first things he does is start accumulating Ethereum in a very efficient way, sustainable way, not through external financing, but rather through internal cash reserves. And that's the message for today, community. I hope the message came across, and I want to wish everyone a wonderful start in the week, and hopefully those who will be able to make it, see you again later on tonight at the Twitter space. Thank you very much, and bye-bye, everyone.